Hello everybody, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here today on Monday, June 7th, 2021 with a Forex market analysis for the upcoming week. And before we get into that, we just want to show you our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. Also, if you haven't done so already, please subscribe to our YouTube channel, Forex Trading Unlocked, and check out the book High Probable Japanese Candlestick Patterns, written by myself, available on Amazon.com in paperback and Kindle versions. Alright, so now let's get to our live action screen right here. Alright, we have the forex-trading-unlocked.com website pulled up already, and we already have the workstation page also pulled up from our navigation bar right here. We're going to skip past the numbers and we're going to go straight down to our chart. So, as you can see, the Euro-US dollar is following through to the upside from the little bounce that it received on Friday. We made a lower move low on Friday, and as you can see, we are aggressively pressuring resistance today. So the key thing right here is that the overall trend is definitely a bull. So we'll key off of the low from Friday, as well as this lower move high from last week. This is the range that we're looking for direction from. Failure from 121.04 will have us on edge targeting lower move lows and a resumption of a bearish correction, which to right now, short term, we are in a neutral to bearish posture, even though we have been rallying for the past couple of sessions. So right now, also as far as the EU is concerned, we can see that there is some other strength coming on the other European currencies versus the dollar. After the dollar had quite the show of strength Thursday of last week and then into Friday's trade, then there was a reversal of fortune, and all of a sudden the dollar bears came back very, very quickly to ignite more buying frenzies for the Euro-US dollar and the other currencies, which we will be getting into as we progress further. So this is what we are looking at today, starting with the Euro-US dollar. Checking the chat room here to see who's already tuned in. Okay, so as far as an upside target, we're not looking for any major explosive rally, but above $1.2258, we are targeting $1.2375 up to $1.24 even. There are some reasons why it's very likely that the Euro-US dollar, unlike maybe perhaps the pound, is going to rally at a much slower pace than, for instance, the British pound. One of the main reasons for this is the fact that as the 30-year Treasury bond and the 10-year notes stay near their lows and continue to pressure support, that's going to restrict a little bit of the bullishness in the Euro-US dollar trade moving forward. So we'll be watching those numbers, or those markets rather, especially because the economic numbers are starting to finally come back into place as far as what is a gauge for the global economy and where we're going and stuff like that. We're starting to finally have some momentum as far as things for direction. Remember, because of last year, there's a real big reason for us not to take much stock in a lot of things, because it was just because of the pandemic and stuff. Unemployment obviously was a huge factor. That being one that we do have to watch. Remember, unemployment claims on Thursday, that could shake things up. So we'll see what happens later on in the week with that one. Remember, there's also the oil numbers, excuse me, on Wednesday that will have a little bit of a impact as well on these markets. So with that, let's look at some potential retracement points. So let's just say that this rally here withers away. Okay, did we fall on really good support already? Well, as you can see here, if we look at this last current wave up here, that the 50% mark was tagged, and so was the 0.618. We were right into this little zone here. So as far as like, did we find good support with that low? Is a good chance for that to remain the current low for the trend and start to generate a wave higher? It's very, very possible. Or we can look at this wave here and go on a bigger scale and that would put us into this area here. So let me get rid of this Fibonacci stuff here. So we've already got a touchdown into this little target area right here. Okay, now we did have a sell signal here. This was our bearish engulfing line, and we did come into our target area. So now this sell signal is complete. Now if it is a longer term sell signal, it remains a short term top in the market. Well then, obviously we will have a retest of support back into this target zone here. A failure from $1.2104 would signal new move lows after a lower move high once again, which reinforces a bearish trend. So we'll see how this actually is impacted. Right now I think it's going to be a tough trade between basically where it's at right now, between these two pivots actually, between the low from yesterday or from Friday and the high from last week. Now should we get another sell-off, then this little target area becomes very rational as far as an expectation for downward momentum. Once again, we're expecting to find support near this last swing low, and then also because of the fact that this Fibonacci sequence would line this up for, if this is just a correction, let's say that we continue to go lower, then this would most likely be the extreme. However, remember, so if you're an aggressive bear right now, keep this $22.58 in mind. Any trading above this confirms the fact that the bulls are here, buying momentum is expected to grow, and odds are you'll see this market trading up around $23.75 up to $1.24 even. But once again, also, should we fail from this $21.04, all bets are off. So if you're an aggressive bear and you haven't gotten in the market, you know that no matter what, your risk level here is $21.04 or a few pips below it. Anything below that, you don't want to be long in the short run. And then once again here, this is our level for your aggressive bears at $22.58. You do not want to be short above this area here. So let's see. Okay, you got a Discord or something. You know what? We did have a Discord account set up earlier in the year, and we had nothing but problems with Discord. So no, right now we stated we're staying away from Discord. It's just more problems than it's worth. I know that there's a lot of people that like it. Sorry, just can't figure out a way to make it work well and not have a big jumble as far as communications and stuff like that. So not to mention their customer support is absolutely horrible. So, and that's another one. That's another reason why we're staying away from them as well. So, but yeah, thank you for your interest on that. There's other ways, you know, to be in touch with us. This is one of them, you know. So, but if you have any questions about any of the currency cross rates, don't be afraid to ask, because we'll look at any of the ones you happen to be trading, by the way. So if you if you trade a euro cross versus something other than the dollar or, you know, pound or whatever, just shoot us a little note here on the chat and we will address it. So speaking of addressing new markets, let's go to the British pound US dollar. This has a similar little reaction after Friday. It made a lower move low and then turned around. Obviously today we have more follow through to the upside. We had a sell signal that occurred right here last week. This high right here is a bearish engulfing line sell signal. In the short run, from this low to this high, we've already come into our target area already. So for that, that's already been solved. But if you want to extend this down even to like this last low here, then we have a good support base at this. We're just going to use the 50% rule for this one, and then also for this one here, which comes in almost at the 0.618 area for that last wave. So as far as good support to downside, this is the area that we're looking at here for the British pound US dollar. Should this short-term correction, because even though it's up for the past 2 days, we're coming off a higher move high and then a lower move low, which at the very least has this on a neutral campaign. Remember, the pound US dollar is an overall bull, so be very careful with selling into this market. So even though we have a sell signal, it's a counter trend trade. We'll see how things manifest over the next couple of sessions. So as far as your pivot points, if you are an aggressive bull, use the swing low from Friday here of around $1.4084. Any trading below this will have us hard pressed to not see a little test into this little area here. Now, a correction would be healthy. I think that should you get down in this area, that's going to be the extreme. If we take the trend line here, you can see that this is kind of buffering and holding this up. We'll see if the trend remains intact as far as being bullish, but I think you're going to really have a good chance to see a sell-off into this area should you fall back and take out the low from Friday here to $1.4084. Now the sell signal that generated this high is also our big barrier for our risk. So if any breach of $1.4250 basically here would add fuel to the fire. More upside momentum would be anticipated, because its odds are you have a lot of your weak shorts have stops just above there. So does that mean we're going to explode higher? No, we may just see a little grinding higher like it's been doing over the past couple of weeks. However, we do have a longer-term target of $1.44 up to $1.4460 in the British pound US dollar. One of the main reasons is the oil trend. The oil trend is helping to support the British pound US dollar. I think the interest rate variable in the US is helping to lag it a little bit as far as pound strength and dollar weakness, but not as much as the strength in the pound is coming from the oil markets. With oil hovering just below $70 a barrel, key off of Wednesday's numbers and also the unemployment numbers on Thursday. I think the combination of those two, should they be bullish oil and also remotely bullish for the 30-year Treasury bonds and the 10-year notes, meaning there would be a rally in those markets, which is an inverse relationship. So as the market goes up and becomes a bull, interest rates will go down actually. So that would also help to fuel a continuation to the upside for the British pound US dollar. So as far as any other news with this one, we have, like I said, the sell signal that was generated last week. We came down to the initial target area. As far as the extension for a longer wave down, this is the area where I think you will find definitely a base of support here, somewhere between $1.4027 down to $1.3962 in this excuse me, basically 45-50 pip band. This is where you'll probably see a good amount of buying come in. Remember, this is where it was very toppy in this area here. We exploded through this, so I think this will become a support base should we get a correction down to this lower area. Now let's look at the US dollar CHF. This market is trying to make a little correction, but it's running out of gas. As you can see on Friday, it made a higher move high and then turned right around. But we are coming off of a higher move low. So short run, this market is in a upwards bullish correction, with the last 2 days and hourly time frames obviously becoming bearish. So the key is, can we re-challenge resistance and get a breakout of 90.58 here, or do we make new move lows here and signal the resumption of the bear trend? Remember, this is in a bearish trend, has been for months. There is no real optimism as far as finding strength in the dollar versus the Swiss. The only thing that will really possibly benefit this would be should we have a big rally in oil and then also a big sell-off in the Treasury bonds and the 10-year notes. Should we get something like that, then I think you'll see a little strength in the US dollar, and then we'll challenge this 90.58 area. But even if we do, I don't see us getting higher than, say, 91.5, 92 cents would be the high for an upside correction in the US dollar Swiss. There's just too many other reasons to be bearish this market right now as it is. Now, we don't have a signal in here. All we can say is that we're coming off of a higher move high after a higher move low. We are in the neutral to somewhat bullish forecast. So for aggressive bulls right now, you're getting a nice opportunity to buy against this 89.46 area. I'd be very careful, because if we fall below 89.46, odds are we're going to fall even lower and take out this low. And I don't see us having a tremendously harsh sell-off. I see it being a grind lower, but like I said, as far as your risk, you have a low risk buy here, because you know that this is the area where you don't want to be long underneath, with a chance to see another run at resistance. As far as being a seller here, I think I'd be cautious about selling it in the hole. Definitely have your stops above this 90.58 area because it could grind a upside correction over a few sessions and just be ugly where, you know, it's not going to explode against you, but the opportunity to catch a break or a lower trading market was probably going to be very, very slight at best. All right, let's go to the US dollar, Japanese yen. This is one that isn't a short-term bull. It keeps on making higher move highs and higher move lows. I would key off of the lows back from this area right here. I do not see this market selling off below $1, 108.56 area here. Not that it couldn't do it, or not that it will not do it, but I think that right now you have a good chance to buy the yen with a expectation of us having a challenge with this 110.36 area. Reason being is there's too many fundamental variables out there besides technicals. Technicals would have you in neutral to overbought for this market. Fundamentals, though, are actually having this become very bullish, the dollar. Now, this could be with the dollar being weak versus the pound and other currencies globally. Do not think that there's not divergence between currencies right now in the globe, because there definitely is. It is very likely that we'll see the U.S. dollar, Japanese yen continue to probe resistance while the dollar is starting to falter against other major currencies once again. Now, as far as do we have a signal? Well, believe it or not, we actually do. It's a counter trend signal. It would be Friday. Friday, this was a bearish engulfing line sell signal. That is a high probable Japanese candlestick pattern. So let me write this down for you so you got it. It's a bearish engulfing line sell signal. All right, so that would be what occurred on Friday right here. How low can we go? Well, if we just go off of this last low here and we put this right here, well, we've already come very close to our target band. So as far as following the 50% rule, there would be our good support base there. And then we have this 0.618 area. Look where that falls. This is pretty funny. So as far as harmonically speaking, our Fibonacci level here comes right into where these lows were falling before. So harmonically, this is a good support area. A failure from this 108.50, 8.56 support band here, that would have us being more bearish for an extended sell-off. I don't really see that happening. I think that the odds are is that you're going to see this slide come into the support band here, touch down, maybe even take fallout a little bit below it, but I do not see any major sell-off unless you would get below this low back here, and I don't see that happening for quite some time yet. I believe that the trend is most likely going to remain. If you go from here, you can see that we're going to come up against this upward sloping support line. Not necessarily bearish. Remember, we're coming off of a higher move high. Even if we come below this area here, making a lower move low, that would be neutral for the US dollar yen. Overall, there is a bull in the long term, in the medium term, and even in the short run on the daily. So it's only in the hourly, on a short-term daily basis, that we have this counter trend negative reaction going on. And like I said, there's too many fundamental reasons that most likely are going to keep the US dollar yen above this 107 area, and including the 108 area. In fact, I would say that especially if you see oil get above $70 a barrel this week, the likelihood of us taking out this high from the end of March comes very, very possible. With a dollar, with 111 being just the beginning of a rally that's going to probably go all the way up to 112.5, 113 even before the trend starts to digest itself. So very interesting lead up for what's going on with that market. Now let's go to one that just aims to disappoint. The Australian dollar, US dollar, we've been calling this one for a while, saying stay away. It is a big sideways jumble here. I mean, no matter what, you just can't seem to get a move. It's a wide range trade. There is no reason to buy or sell this market. It's all a gamble right now, because if you're buying into new lows and selling into new highs, as a range trader, you might do okay. But if you're a swing trader, I mean, you can just see how ugly this is. I mean, on an hourly basis, there may be opportunities, but on a daily basis, you are just, I mean, look at it. I mean, you could, it's almost every day, it's a reversal. Like here you're down, and the next day come back up, and then we reverse again no matter what. Like it's just a never-ending rubber band effect. So until we have a real pure signal here, I would say stay away from this this market. Now, ironically, we do actually have a buy signal. However, this is a real tough one for this market. Right here, we have a piercing line. I would say if there is any trade that you want to look at right now and it's already wide, it would be to buy against the low from 2 sessions ago right here at 76.44. This right here would be the base for any real market action. I don't see it falling below this low, so the risk here I think is very, very solid, but your upside potential really isn't that high either. This would be the level to really break out from, which would be 78.91. I got a funny feeling that we can't even get all the way up there. And even if we do, I would expect it to fall back like it did here. The main reason being is that this market is basically in a big range trade and has been for months. This is where I see it bobbling. I see it only spiking above this range or spiking below this range, just like it tried to do it here and it failed to do so. So as far as the Australian dollar, US dollar, let's just stay away from that one as far as right now, even though there is a buy signal. New Zealand dollar, US dollar is very, very similar to the Australian dollar. You can just literally mimic. Now they're not exactly trading exactly the same. There are some different fundamentals that impact both. But even still for this one, I don't see very much action either. So we had a piercing line here. Still, it's not the best signal. I don't really see us getting, even if we do take out this high, remember we are in somewhat of a bull trend here. It's kind of been neutral over the past month and a half, but overall it is bullish. So we may still challenge with resistance, but then once again, I see it doing the same thing as it does every time it makes inches to a new high. It comes right back and falls back on support. Chopping around, that is really the call. All right, so we're going to look at the US dollar Canada now before we get into the cryptos. Who wants to talk about cryptos? We got a couple of those on the table. So as far as US dollar Canada, we've been talking about this one for a while. Do not try and catch a falling knife. Just do not see any turn in this trend whatsoever. I mean, it just tries to correct and it just fails. We could see here how we set this low last week, started to come up. We tried to make a higher move high, failed to do so on Friday, and that was where the US dollar, on Thursday, the US dollar had gained a lot of strength versus so many currencies. I think that's where you got the lift in the Canada, and as soon as it had a chance to, it fell apart just like the other ones. Now, not selling off in a big way. Remember, this trend is grinding the bottom, so it's not really looking to just completely bury the dollar here, but it is continuously falling. I think if you see oil above $70 a barrel, and especially if you see interest rates get or interest rate market get a rally in the 30-year and the 10-year, meaning lower rates, that could give you a little fuel for a continued battering of support. Below here, as far as downside targets, it's a rough one to call because we don't see any real follow through. Like I can see this market actually getting down on a longer term basis. We have $1.18 half as a target, but that may take a month and a half to get down there. Whereas some of these other currencies, you might see a spiking trend to newer highs and newer move lows. This one here is just grinding. So be very cautious being a buyer here. I would look for rallies to sell, and especially in front of previous highs. All right, now let's get to who wants to look at Bitcoin. This is another one that is winding its coil. The whole crypto universe is kind of hinging on what goes on with this, right? It's almost like Bitcoin is the big index for the broad crypto sector, for all the different crypto meme coins and what have you. Interesting enough, just to let you know, we're going to talk about these following cryptocurrencies. I do hold these, just like I have the €1 US dollar trade on, where I had been short for the past week, and also let No, that's it for as far as the currencies. So I did have a bond trade on, but that's off already from Friday. So, but the following cryptocurrencies, I do own them to some degree. I'm not going to give the amounts or which one I do hold more in. So, but I do have a little bit of all of these. So, Bitcoin right now is wedging. We are looking for a breakout. Odds are the trend is your friend and it is negative, so we're looking for a downside breakout. You can see how trading has really gotten thin over the past like week and a half. Like, this market doesn't settle down for anybody or any day or what have you. Right now it is. So it is wedging. We're going to just play that wedge waiting for a breakout. So we have that low. As by attrition, you can see we're already starting to come through this. So we'll see where it brings us. Right now it's big sideways, but we're coming off of a lower move high. As far as neutral trend is it going to hold? Odds are you're not going to see this thing snaking along sideways between this 41,000 and 33,000 barrier for much longer. Should we fall below 33,350 here, that is a good indication that we're not just going to make new lows, but odds are that Bitcoin is going to seep all the way back down into the upper 20,000 area. I would say 27,000 to 28,000 is probably your next most likely target area before we get a bounce. Remember, the trend is overall a bear right now, so we'll see how this goes. Now, should we get a rally and start to break out and we take out this high over here, well, then a challenge of 41,000 here really sets us up for a nice move back up into like the 52,000, 56,000 area. But remember that just like all markets, they have bull and bear periods. We are currently in a bearish period. Short-term neutral over the past couple of weeks probably has a lot to do with a lot of the news going on in the crypto sector. And I would also watch Coinbase stock. It seems to be like where that is going to some degree. We have a relationship with Bitcoin. So now let's talk about Ethereum rather. Ethereum has been doing the same thing, going sideways. However, it's coming off of a different type of pattern. This one is looking like it's wedging here a little bit more, or more of a pennant. So you can see that while we have this trend going up here, then we also have basically this wedging pattern right here. So this is setting up for a nice return to pushing resistance. Should it do so, we're looking for a rally back up towards this $3,600 area. Not necessarily looking for a move to all-time highs again. I think that you're setting a nice base, and there's a good chance of getting a nice little pop back up into this area here of, say, 3,600, and then finally starting to digest that trade where it probably is going to go sideways between 3,600 and 33,000 where it's at. So I think this little area of highs right here is going to become an area of support. Only if we see a failure from this last higher move low here around 2,190 would I assume that we are going to continue the bearish campaign, or at least the neutral campaign. Now remember, it's had a big run up. It's exploded to the upside in a big way like many of the other cryptos, so it could be just a matter of market's overdone, it's adjusting, it takes some time. Overall, because of the technology and what have you, and adoption of its technology, Ethereum seems to have a very good place in the crypto sector as far as for a long-term investment. What is the longer to how high can it go? Well, that's anybody's guess. But I think that especially unless you see any real hard attack on the crypto industry by especially governments around the world, I think that come by the end of the year, Ethereum most likely is going to have a good chance of being up around the highs that it set already earlier in the year. So 4,400, somewhere around 4,000 to 4,400 by September to November, somewhere in that area, I think is very, very likely. So does that mean I'm a bull on all cryptocurrencies? Absolutely not. All right, now we have let's look at the XMR USD. We have the Monero. This one is actually in a little bit better of a trend, making higher move highs and higher move lows. I would key off of, now this is the one thing that Here's a high probable Japanese candlestick pattern. So this is called a 3 inside out down sell signal here. Okay, so as you can see, it peaked out here on this high, and then we had these 2 negative days. This has a short-term bearish overtone on it. I would key off of that high and use that as your base of your trend resistance. Trading below here has this market going back down to this 200 level area. This may also put a little strain on the other cryptocurrencies. Maybe that's why Bitcoin is going very sideways. You may have a lot of rotation where people are buying certain currencies and then trading them for Bitcoin or vice versa. That may be why Bitcoin is getting very narrow as far as in its range, while some of these other ones are trying to break out to the upside or even sell off like this one. Perhaps we have divergence in the cryptocurrency market. So right now, this is a sell signal, and if this is any indication of the broader sector, then that means that Ethereum rally most likely will run out of gas, as well as Bitcoin will stay where it's at to go even a little bit lower. So now we're going to go to the Dogecoin and see where this is at. So this one here also has a bit of a negative overtone going here. It's coming off of a higher move high after a higher move low. Short run, it is kind of bullish. Longer term, it's neutral. You could say we have a ginormous head and shoulders forming here. Maybe that's the case, maybe it's not, but I would say use these levels and these will tell you. This here, let's see, we'll put this as your first shoulder, and then we'll put this as your head, and then we have this as the next shoulder with a question mark. Okay, so should this be the shoulder, here's your neckline, then we're going to be looking for a test of these levels here. Falling through this upward sloping support line from the neck would be the first indication of a sell-off, and then a failure from basically this 21 cent area here would be very, very bearish for this one. Does that mean it's going down to zero? Probably not. I think that you have way too much interest in this one. My biggest problem with Dogecoin is I think that you're going to see it tank down into these areas here, see a lot of fresh buying because it's just a pet rock meme stock, meme coin. Here's my problem. The biggest one I have with it is the fact that is the technology adaptable, and will it be used? That's a very, very good question, because in the short run, it doesn't seem like it's anything more than attractive to those chasing other meme markets, if you will. If you have to ask yourself if you're going to invest in this as a long-term investment, you have to really evaluate, do you think this is the technology itself going to become not just super adaptable? Will people adapt to actually using it? And will they want to use it? And right now it doesn't seem like, for instance, how you can use, there's all kinds of different altcoins that are very valuable as far as transfer of payments for the financial system, for one example. These are things, like I said, where those coins over the long run, whether they stay at the value they're at forever or even go down to a lower price and hold those values, the technology in the short run does seem to have some sort of future. Dogecoin, to begin with, is a very, very big question mark. So it's a bigger question mark is, does Dogecoin have a real future in the long run than is this a shoulder? So we'll see how this one manifests itself. Let's see if we got any questions on the chat. Oh, hey, cool. Thanks for the remark, man, on YouTube. We always appreciate the comments, so appreciate that very much. So anyhow, getting back to Dogecoin. So for your different alt currencies and cryptocurrencies, those are the ones that we are holding right now. So to be quite honest with you, with this one, Dogecoin is on an average, we're almost long, like right around here. So, but that's neither here nor there. So we'll be seeing, I'm right now looking at it to test this level here, also to buy a little bit more down in somewhere in this 10 cent to 20 cent range, and then I'll hold on to it for a likelihood of getting another gush back up to this 50 cent, 60 cent marker, at which point I will probably dump all or most of any of the position that we have, just because, once again, as far as a longer term potential, as far as being adapted technology, I don't see that happening. And if that doesn't happen, the likelihood of this thing staying where it's at or even going back down to below a penny could be very, very likely, so I would rather make my profit on this one, on this trade, and then have whatever little is left on it and just let it go. I'm not going to tell you what to do, but I think that that's a very, very good plan. At least, no matter what, you pull a profit and then see where it goes. You can't lose on that one. So that'll be the scenario we're going to work with. That's how I'm looking to finish out the trade for this one. All right, let's go to the Euro US dollar. Go back to this one here. All right, what do we have here? As you can see, since we've been talking about this webinar here, the Euro US dollar has not really gone up very much more. It's been trading right where it's at. Remember, be mindful of the fact that we are at lunchtime. The U.S. trading session only has a few hours left. All the foreign markets are closed. I think for the most part, you've seen the most of the action for the day. It doesn't mean that we won't press higher move highs. I just don't see them really going up very much as far as how much potential they have to the upside. Now, as far as follow through, that'll be interesting. Are we going to have a turnaround Tuesday, or are we going to see something else happen? So since we have your attention, we want to also show you here on our forex-trading-unlocked.com website that if you want to use the page like that we're doing that work on, you just go to the navigation bar and click on the workstation tab here. Also, if you want to do a quick view of markets really quickly, you can go to like the Forex tab here, and instead of just writing in the different charts, you can pull up different pages, and they're all broken down. We also have other cross rates here, where you have Australian versus pound, whatever, blah, 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 all versus other ones, including Bitcoin, where it's offered. We also have Hong Kong dollar and the Chinese yuan, as well as a few other currencies if you go to our index here on the Forex page, which, once again, from the navigation bar, you go to markets, and the first one is Forex right there. Obviously, you can access futures here, which is another one. Always a good idea to check out where the 30-year Treasury bond where that finished up the day before. Now, for the futures, there is a lag on it because by law you can't broadcast live futures quotes. So just to be a reminder for you there. So for the Euro US dollar, since we have no questions, we're going to end on this note right here, and we'll see what happens tomorrow. We'll give you a little update on Tuesday and see how these trades are manifesting. Remember that we do have that piercing line that formed in the British pound. Also, we have, remember this one here, we have a piercing line here, which is changing this little trade. This is the one, remember, watch oil. So we'll see what happens with that one. I want to say thank you once again for your time today. Please leave any comments or questions on our video if we haven't gotten to them, or you want to have us answer them later on another webinar. We will, and we will definitely answer it in the comments section as well. So remember to subscribe and pass a like on our videos at Forex Trading Unlocked on YouTube and Twitch. Check out my book, High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions, so you can learn how to trade these signals that are applicable in all kinds of markets. So with that being said, thank you very much for your time. I'm Teddy Keckstedt from Forex-Trading-Unlocked.com.